Let's take a look at your markets now. Asian markets were mixed today and China returned from its Lunar New Year holiday. It lost ground on its first day back, and that might have something to do with the US's 10% tariff imposition on Chinese goods, which came into effect yesterday, and the subsequent retaliatory response from China, which will see higher import tariffs placed on some US goods from next Monday. The Nikkei share average ended the session up 0.085%. The Hang Seng Index lost 0.93%, while the Shanghai Composite Index declined by 0.65%. Over in the United States, the US markets ended yesterday's session in positive territory. This as market players seemingly chose to shrug off trade war concerns following the coming into effect of higher US import tariffs on Chinese goods. Instead, players focused their attention on corporate earnings and economic data, although the pausing of tariffs against Canada and Mexico may have also been a factor. The Dow Jones Industrial Average rose by 0.3%. The S&P 500 gained 0.72%. While the Nasdaq Composite Index jumped by 1.35%. All right, in terms of our local market, we see that the all-share index is trading in positive territory. It's up by 0.3% to 86,733 index points. On the currency front, we see that the local currency, the rand, is trading at 18.59 against the US dollar, 19.33 vis-a-vis the euro, and 23.26 against the British pound. All right, on the commodities front, we see that gold is trading at $2,869 an ounce, platinum at $979 an ounce, while Brent crude oil is trading at $75.53 a barrel. Well, for more on the markets, I'm joined by Devin Shute. He's the head of investments at the Robert Group. Thank you so much, Devin, for joining us. So there are always lots of moving parts on the market scene, with Donald Trump often overshadowing matters these days. But what's grabbing your attention right now?
Hey, thanks, Nompo. Great to be here. I think a big factor driving markets is the dollar. And what we've really seen today is a pullback in it. And I think what traders are pricing in here is almost less risk that we're going to get an escalation in the trade wars. So ran firmly on the front foot. We had a 19 handle on Monday, come back strongly since then. And I think because of the delay in those Canadian and Mexican tariffs, probably coupled with a restrained Chinese response to their tariffs, has got the market thinking, okay, maybe we're not going to get this tit for tat tariff escalation. Perhaps it is more transactional, and this is just simply the opening bid from President Trump, and calm heads might prevail. But that is a big assumption. A lot to be seen there. I think what I would also add in is, as you said at the top of the slots, is that the US earnings is in full swing. We had some technology companies coming out with some interesting results. Meta continues to do well. Google had some results that disappointed. So yeah, really a lot for investors to concentrate on and try to forge a way forward.
Yeah, very busy for you indeed. So here at home, it's the eve of the State of the Nation address, the first one since the establishment of the GNU. I know that the market doesn't really pay that much attention to the SONA address and is more focused on the budget. But of course, there are lots of policy ideas that will come out of it. What do you think market players will be focused on today? Well, tomorrow.
Yes. Look, I think it's unique because it is the first SONA under the GNU, and the GNU has been really well received by markets through the whole of the second half of last year. I think what the markets are going to be focusing on closely is for any rhetoric or clarity or guidance on progress and how that's going to be made on economic reforms. Whether it's on the load shedding side, whether it's on the ports, whether it's on reducing red tape for business or collaboration between business and government. All of those are going to be critical to unlock those medium-term plans that the GNU speaks about to create jobs and the economic growth we so desperately need. So I think an indication of the thinking behind that, also how unified the GNU participants are in that thinking. There's obviously been some quite contentious issues within the GNU that they've had to navigate recently, but are they united around kind of core economic policy on job creation and growth? I think that's a big one.
So you talked about the dollar earlier, and conversely then we need to talk about the rand and what's happening, because the rand is influenced by lots of different factors, local and exogenous factors. How do you see the local currency right now? How do you see its trajectory going forward? I know there's so many moving parts and a lot can change from this month to the next, but how do you see it?
Of course, and one thing we do know for certain with our currency is that it will remain volatile, being an emerging market, very liquid currency. But as you touched on, those exogenous factors are massive for the rand and usually the primary driver of it. So that means we need to look at what's happening with the dollar. And the dollar's had a lot of tailwinds recently. Increasingly commentary out of the Fed is talking about interest rates remaining higher for longer. US tariffs are also going to be positive for the dollar. And, the US economy is looking strong. So as a result, all of those tie into a strong dollar. Obviously, if any of those had to unwind, we had a jobs report out this week that looked like the US labor force might be softening somewhat. So that's one to watch. So my sense is that we're not in for, any massive moves one way or the other, but we're going to follow the dollar. And if those factors stay in place, higher rates for longer, tariffs, and a strong US economy, it's likely our rand will remain in kind of these ranges that we're seeing it at the moment.
All right, well, more to talk about, but not enough time. I'd hope that we touch on the Sasol update, which wasn't so great, but we're going to leave it there. Thank you so much, Devin, for your time. That was Devin Shute. He's the head of investment at the Robert Group.